Welcome back. Let's talk about Mold-Tek Packaging. Reported a set which was lower than street numbers. Sales volumes grew by 7.5%. Revenues grew by 5.8%, while profit after tax slipped by 12%. To discuss this and more, we have Janumahanti Laxman Rao, the chairman and managing director at the company, joining us now. Mr. Rao, good afternoon. Your sales volumes grew by 7.5%, while revenues grew by 5.8%. Was there some pricing pressure that you saw this quarter? What is the outlook in terms of volumes for FY25?
See, the volumes have grown better than last year. Last year, growth was tepid. It was only 4.8% for the full year. This year, we clocked 7.5% in Q1. And as our projects for Aditya Birla Group and Pharma, total 3 units, have gone into commercial production, all those costs associated cannot be capitalized anymore, and they have been taken to the P&L. So that has impacted slightly the margins. However, the EBITDA grew by about 3% overall in absolute numbers. Per kg, it's come down marginally from 37.7 for the full year last year to 37.06. This is because of higher costs have been now absorbed in the P&L due to the commercial production of all these 3 plants. So going forward, ABG plants are expected to pick up volumes. And similarly, Pharma, we have 7 companies already audited our facilities, and half of them have cleared the facility for commercial production. And we have also been very lucky to get 7 to 8 new product developments for pharma companies, which will certainly lead us into the pharma packaging in a big way in the next couple of quarters. As you know, pharma require a lot of statutory compliances and stability tests. The process of selection is slower, but I am glad that already 7 companies have selected us and 7 products are under development. That should lead to growth in the coming quarters.
So there is basically no pressure on pricing, so to say, is what you're saying. I just want to understand that differential between revenue growth and volume growth.
See, our product mix makes the difference. The growth, paint and pails will not lead to higher EBITDA improvement. So if the food and FMCG growth was sustained more than 15-20%, that would have improved the margins. But because of pails and square packs are the leaders in growth this year, this quarter, our margins are under little pressure. But going forward with Pharma, which has almost double the margins, will be start contributing maybe from Q3 or Q4 onwards, which will again take back our status in EBITDA margins.
Understood that, Mr. Rao. Mr. Rao, so it appears as though on a weighted average basis, the NSR, the sales pricing, seems to have dipped around 2% on a year-on-year basis. Earlier, you had given us a volume growth guidance of close to 15%. Do you stick to that guidance? You also mentioned you've started supplies to the Grasim plant. So going for, did you, in this particular quarter, see the full impact of that particular supply coming in? And Q2 onwards, what is it that you've penciled in from the Grasim facility?
Yeah, Grasim facilities are picking up pace now. They started picking up from March, but the numbers have really started building up from June, July onwards. And going forward, the indications also are reasonably strong. With that in mind, we are still sticking to a good double-digit growth. It could be very close to 12 to 15% range at least, if things go as our plans.
Okay, and the current Cheyyar, Panipat and Sultanpur plants, they are currently operating at 15 to 25% capacity utilization. What is the target by the end of this year? What levels can you reach at in these facilities?
Already in ABG plants, we are now crossing 50% in this quarter, July and August onwards. And probably it will pick up. And we are in fact adding facilities at both Cheyyar and Panipat to be ready by December, January. So capacity utilization of current plant will certainly reach a good number in the at least 70 plus by the 3rd or 4th quarter in those 2 Cheyyar and Panipat plants. In Pharma, we are currently hardly using the facility, about 75-80 lakhs worth of invoicing we did in this quarter. But that number will start doubling. Hopefully by 4th quarter, it will be a sizable contributor, something around 5 to 8 crores in that quarter. So that is the target we have, but I have more clarity by October this year.
Okay, Mr. Rao. Mr. Rao, coming back to the volume, you've given a guidance overall for 15%. Now, in the paint segment, what is it that you're penciling in? Is it double digit that you're penciling in? And pharma, while you said you've onboarded quite a few new clients, do they start, coming into your numbers from FY25 itself? And what will be the volume growth that you expect over there?
See, coming to the paint industry, I am hopeful of closely coming to a double-digit growth, which was negative or nominal till last year, thanks to ABG's new edition of business. And coming to pharma, by Q4, we expect the numbers to be at least contributing 2 to 3% to the top line, with a stronger bottom line because of better margins there. And next financial year, these 7 products, what we are developing now, themselves have a potential to reach 40 to 50 crores turnover. And in addition, there could be some more products that may come up, or even the regular products we may get orders during the next few months of the current financial year. So I'm very bullish on pharma packaging. Going forward, that will be our growth leader.
Okay. Mr. Rao, I wanted to understand the impact on profits this time around. High depreciation, high interest is something that impacted the bottom line. What is the quarterly run rate that you're looking at in terms of interest costs and depreciation now? Most of your capex is done as well. Is this something that will continue to impact profits going forward while you're very bullish on the top line? What is the growth target for the bottom line?
See, as you correctly said, higher depreciation and higher interest has depressed the net profits for the year by almost, for the quarter by about 8%. But going forward, these facilities, almost 250 crores have been invested. There's half of our assets are invested in the last 2 years, and they are yet to fully come into commercial use. So going forward, as the productivity and capacity utilization improves, the bottom line also will improve. So I'm confident that the growth will be visible towards the last 2 quarters of this year, and definitely from the next financial year.
So the interest cost capitalization or the interest cost accounting, most of it has been done now?
Yes, most of the capitalization is no more available. It's all going to the P&L. That is one of the reasons for the depressed PAT.
Okay,
And even from 9.4 crores last Q1 to 11.55 crores.
Okay. Thank you so much, Mr. Rao. Thank you so much for joining us and explaining the numbers and the way forward. We'll now slip into a short break. When we come back, we'll put the focus on Cummins, which has seen a very sharp intraday recovery. Stay tuned.